Well, the labor market isn't falling apart, but it's losing momentum. New data out this morning shows 214,000 Americans filed for unemployment last week. That's up from 6,000 from the week before and slightly higher than expected. Layoffs are still historically low. Unemployment's at 4.3%, but hiring is slowing. Let's bring in Jeffrey Small, partner of Retirement Income Source. Jeffrey, good to have you back. So if companies aren't laying off people, but are also not bringing in new people, does that signal stability or the start of a broader slowdown? What do you think?
Well, Alicia, we call that, low hire, low fire. And so the labor market isn't cracking, but it's clearly cooling. We're not seeing layoff surge. We're seeing basically more of a hiring freeze. And this is exactly the kind of soft landing combined with sticky inflation that the Fed hates as the current setup. And so that's the problem going forward. But we're in a no landing tug of war with growth slowing. And at least the number didn't go too low today from the expectation on the jobs number. But we'll see maybe rates cut maybe the last half of this year, maybe third or fourth quarter. We'll get lucky. But the Fed's going to be mostly data dependent before they reduce rates.
Yeah, as you mentioned, the Federal Reserve, they were not aiming for this. So do you think this is also a warning sign that inflation isn't going anywhere?
Well, inflation's getting stickier because the cost of energy is going to drive everything up. And we're back on the rise again with tensions rising until we get this Iran quagmire, resolved and we can see energy begin to flow and the pressure comes off of energy markets. I mean, remember, it was just 2 months ago, we were at $61 a barrel. Today, we're at $94 a barrel in real time. And so that means everything that we buy is going to cost more because it's going to cost more to transport since we're an oil-based economy. Yeah, and so until that gets resolved, we're going to see pressure on inflation. And we're also seeing pressure in the markets. It's going to bring in more volatility in the markets. The stock markets are going to be grinding to a certain degree with more volatility, more potential for drawdowns and news-driven events. So we really need to get this energy thing resolved, but it's going to take some time to do that.
So for everyday Americans, when it comes to unemployment, if unemployment stays relatively low, does this trend that we've been seeing recently, does it mean it's about to get harder to find a job or harder to make a move to a different job, possibly?
Well, I think it's definitely harder to find a job, especially for the first-time job applicants that are out of college. They're having a tough time right now. But in a low hire, no fire environment like we have, where employment is basically freezing up due to the current economic conditions and the long-term bullish cycle that we've had over the last 10 years, I mean, economics are cyclical. It is time for a traditional pullback. And so, but right now, the market tonality is very bullish. The economy is very bullish. GDP is in the black. That's the good news, to about a 2.5% annual rate. And so there are still over 8 million jobs available in the United States today that we don't seem to have the ability to fill. And so I wouldn't say that the people that want to upgrade are going to be held up from doing that, but they've got to seek out their own opportunities. I mean, we can't find good people in our company, Alicia. It's very difficult today. We have to, of course, hire firms to headhunt today.
Very different job environment indeed. Jeffrey Small, partner of Retirement Income Source. Appreciate your time and insight today, as always.
Thank you.